Welcome back. You're watching Closing Trades right here in ET. Now, if you look at the markets, yes, we are holding on to the gains. There are certain select pockets that are actually moving in trade today. Case in point being RailTel Corporation. This one is seeing a good jump on back of an order win. You have CDSL on the other hand, which is under pressure and has been under pressure since the word go on back of the earnings and drop in actually Q4 profits. So that's one of the reasons why you had CDSL that was down and out. There you go. It's recovered actually from an intraday lows. You also have the OMCs that are seeing good strength in trade today, given the fact what is happening in the crude oil market. So you have IOC, BPCL, HPCL that are gaining in trade, while yes, you will have the likes of ONGC, Oil India, as well as Reliance Industries actually be under pressure on back of that crude oil price drop. But let's bring on board our guest for today. We have Aditya Agarwala, who is joining us on the technicals. Along with Aditya, we'll also have Kunal joining us in a short while from now. But Aditya, what's exactly playing out in the markets today? And do you think that we should actually see this as a trend in the making, at least for this week, that we will see a shade of green through the course of the week?
Hi, Cheryl. Good afternoon. Thanks for the show. I think it's more of a consolidation for the markets, and that is likely to continue both on the Nifty and the Bank Nifty. If we talk about the Nifty, clearly we are facing resistance closer to about 24,600, about 24,800 on the upside. I think it will take some effort and some time before market breaks out of that hurdle of 24,800 on the upside. On the downside, again, supports kick in somewhere between 24,200, about 24,000 on the downside. So I think markets won't break those support levels as well. So it's more of a consolidation between these two zones. If we talk about the Nifty specifically, talking of Bank Nifty, there is a bit of a cool off from the up move that we have seen. Again, a very narrow consolidation that we are witnessing, 54,500 on the downside, about 55,600 on the upside. So again, Bank Nifty 2, I think will face somewhere between these two hurdles. Bank Nifty 2 can continue to oscillate. I don't see too much of a cool-off correction or a runaway rally both on the headline indices. You can have sector-specific activities going on in the market, which we are witnessing, and stock-specific buying and selling also would likely to continue.
Okay, Kunal, what's it looking like? Afternoon, firstly. While, of course, Kotak and SBI are under pressure, it's not all that bad. Today, of course, it's all about the Adani Group of names, right?
Yeah, it's more of juggling the markets have shown today because, I think after the kind of a sell-off which has happened for a few of the stocks, large cap names like Kotak, you're trying to see a balancing out which is playing out with the Adani Group of names that's offsetting the losses. Then you have, some pressure which has emerged from the likes of Axis, ICICI Bank, but then again, that's getting offsetted by the mid-cap and the private sector banking names. So I think it's more of juggling which is happening today in terms of the sub-sectors and across sectors for the markets, and that's why you're seeing the index more or less flattish or consolidative. But again, I think this would still be considered as a positive sign unless the index breaks below major support levels. Still cling on to the view of 24,000 as a strong support and 24,500 as a resistance. If you manage to break past about these levels and closing basis, then I believe that that's where new trends could start to emerge.
Right, so that's the take coming in on the markets. Kunal, wanted your quick view, especially when you talk about what's exactly happening in the crude oil market. And I think you track crude also pretty closely. How is it looking to you, given the fact that a lot is dependent on that crude oil price movement back home as well?
Yeah, so of course, crude oil price impact is the reason why you're seeing the OMC stocks rallying up in the last few days. But I believe that the broader view for Brent crude and NYMEX crude, I was looking at the charts, is that say closer to this 50-55 odd band, you're seeing some sharp buying zones emerging for this asset class. And I think that's where I would believe that if there is any kind of a sudden price correction into this territory of 50 to 55, that would generally be taken as a buying opportunity. But again, the upside, you're seeing over the last 1 to 2 years that the resistance has been falling for crude oil prices, and that's one of the reasons why you're seeing more of a drag which could play out for Brent crude say over the near to medium term. So my belief is that we are looking at a point where Brent crude may drag, but I think sharp corrections to that 50 to 55 band I think could be taken as a good buying opportunity.
Okay, a bunch of other names which are now actually in focus. There's, of course, Adani Port, other than the fact that, it seems the reports are doing the rounds that the Adani Group may have met representatives of the Trump administration. But APSEZ handled cargo volume, which saw an uptick of about almost 4% on a year-on-year basis. And it's actually containers which delivered and saw an uptick of 21%. Liquids and gas about an uptick of about 8% or so. And that's really auguring well for the stock price. There's, of course, Biocon Biologics as well. It's secured strong market access coverage for one of the drugs in the US, which actually covers about 100 plus million lives. So that's the other stock which is actually holding up in trade. Other than that, of course, there are earnings reactions. M&M is holding very strong. That stock is higher by nearly about 3%. Although, on the other hand, Kotak Bank is still languishing, SBI as well is down. The other one, Avenue Supermart, that's recovered quite nicely from where it started off in that gap down. But Kunal, just very quickly, considering this was one of your stock ideas earlier, just wanted to understand how you're reading on the charts, and does it seem like after that gap getting bought into, could we have formed a near-term bottom?
Yeah, it seems like, because now the indicators are extremely oversold for Avenue Supermart. The stock has bounced back today, or made a low back again at the 50-day moving average. The last time it had done was just at the start of April, when the stock had seen a similar kind of a intraday gap down. Post that, we saw the stock making a new swing high, a multi-month swing high. So both on the back of indicators bottoming out, the stock price already reacting pre the result. So it's already corrected from 4,600 to sub 4,000 levels in the anticipation of the results. So that's where I would believe that maybe a near-term bottom could be at place, and you could be looking at a steady recovery going forward.
Okay, let's move on. That's, of course, Avenue Supermarts. It's climbed back at that 4,000 mark. We'll get to Mayuresh Joshi in just a bit and get his take on a bunch of these earnings. But here's an ET Now exclusive, and we understand that the central government has asked states to ensure adequate power supply amid surging temperatures across the country. In fact, sources tell your channel that the Power Ministry has written to states to ensure sufficient power purchase agreements or PPAs as well. Prakash Priyadarshi, my colleague, is here with more details on what his sources are telling him on this one.
Yeah, that's an important development coming in, as we are learning from our sources that the Power Ministry has written to states to ensure sufficient power purchase agreements to maintain adequate availability of power. Sources are suggesting that the states have been told to procure sufficient power to meet any sort of power demand during ongoing summer season. Sources are indicating that the government has held meeting with the northern and western states. In fact, states like Uttar Pradesh, Bihar, Madhya Pradesh are making long-term power purchase agreements. Some states are making their own arrangements, like Rajasthan, Gujarat. These states are making their own arrangements. They're inviting their own bids. But that's a very crucial development from the power generation companies' standpoint, as this development will help them secure more long-term power purchase agreements going forward. Along with that, it is important to note that the peak hour power demand is estimated to cross 270 gigawatt during ongoing summer season, and therefore government is making all-out effort to meet any sort of power demand going forward. However, some emergency plan have already been prepared, and the government is now pushing states to make more long-term power purchase agreements, and that will, of course, help power generation companies secure more long-term power purchase agreements going forward.
All right, thank you so much for that, actually, Prakash, for getting us those exclusive details, and an important one at that, given the fact that you have the Power Ministry that has written to states to ensure sufficient PPAs, and the centre has asked states to ensure adequate power supply, given the fact that we are actually seeing, or we are at the cusp of that demand surge when you talk about power. We also have now Mayuresh Joshi joining us this afternoon. Afternoon to you, Mayuresh. Thank you so much for joining us. And let me actually talk about the power space only with you, given the fact that you now have the government actually writing to states and also asking the states to make sure that you have the adequate power supply, and given the fact that we are going to hit the peak of the summer season, which means that the demand for power will only increase given the fact that you see rise in temperature. How are you actually gauging the entire power space at this point in time?
So very good afternoon. No, I think three aspects, right? You've got power generators, you've got power transmitters, and then you've got the power EPC players as well. Now, when it comes to the generators, the expectations is that with summer coming around, the expectations in terms of peak power demand and peak par loads is going to be significantly higher over the next few weeks and the next couple of months. And therefore, I think stocks like an NTPC, for example, Power Grid as an example, also is a transmitter with grid transmission lines and capex to capitalization remaining extremely stable for both these companies, having decent dividend yields. Along with Coal India, I think the expectation largely is that we peak power demand expected to surpass record levels this time round. Expectations of thermal coal coming back very, very strongly at this juncture might actually mean that the blended realizations for Coal India might be relatively better. And also, let's not forget the dividend yield is significantly higher compared to a lot of players. So I think these players might remain in focus as we speak, at least from a PSU perspective. From the private perspective, obviously, players like a Tata Power, Adani Power should remain in focus. But again, I think power EPC players, I think, might also remain in focus to a large extent. So let's not forget that over the next few years, as India is expected to transition quite significantly, specifically in the renewable space, the FGD space as well, where critical thermal polluting plants might need equipment to probably ensure that they're running with more desulfurization. And therefore, I think the EPC players, including the likes of BHEL, including the likes of Parmec, might probably remain in focus. And therefore, I think as a space, I think looks attractive with government initiatives, government capex, the entire renewable theme expected to get pushed over the next few years. I think this is one mega theme that investors can probably look at.
Right. Mayuresh, want to know what's the pecking order like now, given that all the big four are out with their numbers within banks, that is, ICICI Bank, HDFC, and the disappointment that we saw from SBI as well as Kotak?
So Aisha, I think the bias still remains with ICICI Bank, stroke Axis Bank, because as a disclaimer, we continue holding these stocks in both our domestic as well as global portfolios. Results were in line with estimates. The commentary was again in line with estimates. And again, a large part of the expectations from analysts is that over the next few quarters, as we head into an interest rate cut cycle, the NIMs and spread should benefit quite significantly. Consciously, even if you read through HDFC Bank's commentary, I think the underwriting on advances growth has been consciously lowered to a large extent, because they want to focus specifically in terms of both the cost to income as well as their asset quality on the balance sheet, which has improved quite significantly over the last few quarters. The risk-weighted assets as a percentage of their balance sheet, the capital adequacy that all these three banks probably carry are significant in terms of providing growth and impetus to the balance sheet compared to the rest of the bank. So I think these three remain probably on top of our radar. State Bank, in my own personal opinion, I think it was not a disappointing set. Earnestly, I think if you probably look at how the advances growth has been, the cost to income ratio has been settled around 35 bips on. The expectation is that asset quality pressures, which have come off quite significantly with GNPs at 1.82, net NPs at 0.67 odd, I think they should come up quite significantly or remain in an enhanced mode in terms of efficiency coming down as every passing quarter comes through. And therefore, I think from the public sector banks, I think state banks, so I think the top large leadership banks is something that we continue to remain and keep our focus.
That's the view coming in on the banking space and pecking order coming in for Mayuresh. Aditya, what's your pecking order? Will it be PSU banks or will it be private sector banks? And in private sector, will you go with ICICI Bank?
From the large cap space, yes, Cheryl, I think ICICI Bank definitely tops out for me. Alternatively, I'm also looking at the mid-cap banks. They are offering an excellent risk to reward at current levels. So probably I will diverge a little bit, look at mid to small size banks and get into them because clearly the large cap banks have outperformed in the near term. So City Union Bank is something which is looking very interesting to me at current levels. I would stick my neck out, be a buyer here, maybe place a stop loss somewhere around 170, 75 rupees and look for a target of 200 plus here. Easily can test levels of 220, 240 if one holds on to it for some time. IDFC First is also something which is looking very interesting to me, purely going by the chart setup. It's broken out from a downward sloping channel at current levels. I'll be a buyer in the stock for a target of 80, 85. Couple that with a federal bank, I think so that is also something which is looking interesting to me. Risk to reward is in favor of going long at current levels. Look for a target of 215 to about 220 on the upside. So the large cap banks at current levels, I would stick my neck out and get into these mid to small size banks. And I think so they offer an excellent risk to reward and can see easily 10 to 15% upside in the near term.
Right, okay, that's the take coming in on banks right now. Let's talk about the other underperformers. Sure, it's Kotak and SBI, which are at the bottom of the pack, but some of those crude sensitives, looking at ONGC, for instance, on one hand, that's down about almost 2%, but OMCs, they are the ones which are really having the field day, be it a BPCL, HPIOC, they're all holding up quite smartly in trade as well. Aditya, does it seem like it's a good tactical trade, the OMCs, and can one still go long?
Oh, definitely, Aisha. I think they still offer an excellent upside, even if somebody has to go out and buy right now. Maybe if I have to place the top one between the three, I think HPCL is something looking very interesting to me for a target of 435 to about 445 on the upside. I would be a buyer here. Just place a stop loss below 400. I think it will see these levels hit in maybe in few trading sessions. So HPCL for me is still a buy despite the fact that it's up 6% in trade today.
Right. Talking about crude oil prices, the crude oil derivatives as well, Mayuresh, wanted your view on the paint segment, given the fact that these counters also get impacted with how the crude oil prices move globally. Apart from that, do you think there is any other trigger that one should look at the entire paint space, given the fact that they are hit with what exactly happens when you talk about demand trends, consumption, spending, everything?
I think three broad aspects. One, I think in terms of demand stroke consumption expectations, Q4 largely muted because the recovery was still very, very back-ended, specifically when it comes to urban and semi-urban consumption. And therefore, with tax cuts which have started playing out from the quarter that we are speaking, and expected to have significant traction as we head into the second half, coinciding with the festive season, I think the expectation broadly is that volume should start picking up as we head into the second half, specifically for the sector as a whole. The second aspect in terms of rural consumption as well, the expectation in terms of better monsoons this time round. We've already seen traces of rural consumption coming back steadily. And therefore, with better monsoons, the expectations in terms of better crop realizations and better rural discretionary spending might mean that volume should start picking up as far as the rural side is concerned. The second aspect in terms of inflation or input costs, the expectations in terms of crude derivatives, titanium dioxide, which is largely lower as we speak, is expected to probably remain so over the next few quarters as well. And if that probably happens, the kind of expectations, both in terms of gross margins and EBITDA margin performance, might be significantly better as we head into the next few quarters. Last but not least, I think from a competitive intensity perspective, I think a large part of the pressures that have probably come through in terms of competition have largely played out. And there, I think as demand comes back slowly and steadily, I think the bigger names, whether it's Asian Paints as an example, Berger Paints as an example, should bounce back very, very smartly as well. Again, autos as a part of the revenues should also come back smartly in the second half. And therefore, I think one has to really believe volume-led growth largely should come back in the second half. They have underperformed for the past few quarters. But in my own opinion, I think earnings should bottom out as we head to the first half and significantly improve for paint companies like an Asian Paint, Berger Paint as we head to the second.
Aditya, check in on Asian Paints because this has had a very long patch of underperformance. Have we come out of that finally?
Not just yet, Aisha. It still has that massive gap down, which is yet to get filled. Till the time that gap gets filled, I think so it will face resistance close to about that 2600, about 2800. That is the gap area. That needs to get filled for the stock to comfortably get out of that downtrend rut and then maybe see higher levels. On the flip side, I think so Berger Paint offers an excellent reward. I also agree with Mayuresh that I think it's a matter of time before you see these paint companies see much higher levels. But if I have to pick one, maybe I'll go for a Berger Paint, which looks cleaner and a much smoother chart structure. And maybe for a target of 650 to about 750, I'll be a buyer here.
Coming in on the paints segment, but Kunal, I wanted to get your BTST ideas for our viewers today.
So there'll be two buy calls. NBCC is something which is coming back into the radar after the last 2 weeks of price correction, and where the stock is corrected by more than 5 to 7%. So at 95 odd levels, looks attractive for a near-term target of 105. Stop loss to be kept at 90. And the second is upon Aptech. That's a chart mid-cap name, which is making a flag pattern breakout, trading at 155 plus levels. So it's suggest a buy with 170 as a target. Stop loss at 153.
Aditya, what about you? What's your BTST idea?
So I've got a couple of buy recommendations as well. The first one is Aarti Industries, excellent looking charts. and stock has been doing well for itself for a target of 485 with a stop loss at 425. I'll be a buyer here. The second stock on my radar is Max Health. Again, this entire space is looking very interesting. Look at the way Chola has bounced back. Max is also looking interesting. So I think one should go ahead and buy at current levels. Look for a target of 1250 on the upside with a stop loss at 1070 on the downside.
Right, so that's the BTST ideas coming in from both of our experts. Mayuresh, I wanted to come to you and get your view actually on the entire FMCG space. What's your view on that one? Because now that we are in the new financial year, we are expecting things to actually brighten for the entire space, given the fact that you had the tax cuts, SOPs, as well as the rate cuts also actually playing, which means that more money in people's hand, more spending power. What's your take on FMCG? Do you think that this will be a huge catalyst?
Absolutely. Likewise, for the paint sector, I think the expectation largely is that FMCG should also benefit in terms of consumption coming back very, very strongly. And let's not forget, I think almost 55% to 60% of overall volume growth comes through from the rural areas. So as rural areas, discretionary spending comes back very strongly over the next few months, next couple of quarters, along with a sharp revival happening in both semi-urban and urban areas. I think the volume growth, the conundrum that a lot of FMCG companies were facing, I think that should largely be behind us as we head into the second half. And because of all the issues that FMCG companies had to face because of demand, because of pricing, because of input cost inflation, the kind of grammage reductions that had happened, the kind of SKUs that they probably came out with, the kind of pricing tweaks that they had to do. I think with demand coming back, the expectation largely is that volume-led pricing growth should largely start coming back in the second half, which gives large part of the FMCG pool the operating leverage that was clearly missing. Obviously, expectations in terms of select companies that might be outliers compared to the rest of the pack might still hold true. Q4 might still remain largely subdued for a whole host of FMCG companies. You'll see gradual recovery happening in Q1, Q2, but a significant one at that as we head into the second half. And therefore, I think a stock like Marico is something that we continue holding in our portfolios. Numbers have been strong. Volume growth was extremely strong. Obviously, margins came under pressure because of input cost inflation, but they should start tapering out for the sector as a whole, for Marico in particular as well, as we head into the next few months. And that should get good enough operating leverage onto the balance sheet. Outside Marico, I think Radico Khaitan stroke United Breweries is something that we continue liking. The expectations in terms of premiumization that both these players carry onto their balance sheet, pricing remaining extremely stable, expectations of some states expected to carry price hikes, clearly indicate that volume-led price growth plus premiumization works in their favor. Balance sheet remains strong. And input cost, even in their case, example being ENA, molasses, glass bottle prices, remain soft and could continue to remain a tad bit soft as well, giving that cushion to EBITDA margins as we speak. So I think a select few names that continue liking and holding.
Right, I just want to check in on what's happening on, the global market front. And let's check in on firstly what's happening within the European markets. They've started off quiet, just marginally higher, though some markets like a DAX and FTSE are definitely outperforming quite a fair bit. In fact, the FTSE is higher by almost about 100 points. But that's not quite the case with the US futures. The Dow is down almost 270 points. It's about a 1% cut for the S&P futures and almost a 200-point knockoff for the NASDAQ futures as well. So quite a bit of disconnect actually what's happening in Europe and what the US futures are currently sitting at. Seems like we're headed in for an interesting evening. Let's see what actually transpires there. But that said, we're closing in pretty okay for ourselves. The churn clearly is quite evident in the market because I don't remember the last time the Adani Group of names were actually the top leaders from within the large cap space. This trend which has climbed up about 4.5%. It's back at those 5,400 levels, I think pretty much around from where when the earnings were declared. There's Shriram, which is also higher by 4%. A solid 3.5% move is what M&M as well is closing the day with. Eternal higher by over 2.5%. ITC looking good by about 2%. Tata Motors higher by 1.6%. It's banks which are actually underperforming. Even ICICI Bank is closed in flat. Kotak, of course, goes home pretty much around those gap down moves. 4.25% loss there. SBI still down 2%. And you've not really seen any material improvement, at least on these names at all.
Right, so that's the way how the markets are actually panning out at this point in time. No doubt the US futures are indicating that we are in, at least the US markets are in for a weak start, given the fact that you have Trump talking about new tariffs this time around. On Sunday, he announced a 100% tariff on movies produced outside the United States. There's been less clarity on that particular front, and that's the reason why actually you have the US futures that are down and out at this point in time. But as of Indian markets, yes, we are holding on to positive territory with the broader markets outperforming the benchmark indices. And Kunal, do you think this is a trend in the making, where you'll have the broader markets actually put in more strength, more steam compared to the benchmark indices?
Yeah, that could happen, and I think that would still be considered as a positive or a healthy sign, because in market phases, when large caps, they lead the rally first, and then when the move matures, the mid caps are the ones which take the baton forward. So I believe that we should be in a phase where potentially the mid caps and small caps can start to outperform. The mid cap in Nifty 50 index is just about I think 0.5% or 1% away from its 200-day moving average, and in this last 8-9 days of consolidation, the index has tried multiple times to break past about those levels. Eventually, I believe once a resistance level is tested time and again on short-term charts, the resistance heals and you might see the index going to break out. So I believe that we should be in for a potential breakout for the mid-cap as well as the small-cap index over the near term.
Okay. Kunal, Aditya, as well as Mayuresh, good to have you guys on board with us. Winding up for the day, and let me hand it over to Ashesha for the closing trades.
Well, yes, turned out to be a good day for the Indian markets and good start to the week. Nifty is up nearly 120 odd points, ending near that 24,470 odd mark. Broader markets were also in action in trade today. Nifty small and mid cap index gaining in trade. Banking stock, of course, banking index was an underperformer in trade today. Nifty Bank ending the day in the red, below that 55,000 mark, down nearly 175 odd points. Kotak Mahindra Bank down 4.5% after it reported weak set of numbers, and that was the biggest dragger on the Nifty banking index. SBI also, after reporting its numbers, ended the day with a downtick of over 1% in trade today. In terms of other losers on Nifty banking index, we had IndusInd Bank, which was down 0.7% in trade today. On the flip side, though, oil marketing companies were gaining in trade today after the move that we saw on the Brent crude over the weekend. Brent crude fell below that $60 per barrel mark. We had all of those oil marketing companies gaining in trade today. IOCL up 3.5%, BPCL, HPCL, all of these stocks were gaining in trade today. ONGC, though, is an oil producer, oil explorer, because of which we saw that negative impact, 1.5% lower in trade. Nifty Auto Index was also gaining in trade today, up nearly 2%. A whole host of auto stocks were gaining. We had Motherson Sumi, which was up 5%, biggest gainer on the Nifty Auto Index. We had M&M after reporting very strong set of numbers. Management commentary was also on the positive side. M&M ending the day with gains of nearly 3%. Samvardhana Motherson was up, and we had Exide Industries ending the day with nearly 3% gains. A whole host of stocks were in focus on the back of earnings. First up, let's talk about Marico, where it reported 4% volume growth, 7% volume growth, the highest that we have seen over the last 14 quarters. Very strong management commentary. Brokerage houses also continue to remain very positive. Marico ending the day with an uptick of nearly 4%. We had CDSL, which reported weak set of numbers, where profits declined by nearly 22% on a year-on-year basis. Margins were also under pressure. CDSL down 1.5%. Swiggy, this one was the biggest gainer in the broader markets today, ending the day nearly 8 to 9% higher, 12% higher. 343 is where it is currently trading after it announced scale up of its food delivery business. So on the back of those expansion plans, Swiggy ending the day with an uptick of nearly 12%. And we had ICICI Bank and Godfrey Phillips, which were trading at all-time high levels today. So all in all, turned out to be a day for Indian markets. Broader markets were also performing well. Nifty ending the day near that 24,460 odd levels, but turned out to be a weak day for the banking and financial stocks today.